Okay, the market's open for trading. It is Sunday or Monday, depending on where you live. It is December 9th or December 8th. And again, the market is open officially 1 hour now. And let's take a look at some of these levels as opposed to what we were looking at last week, the aftermath of non-farm payroll, and then the result of some of those trades from Thursday and Friday. So here we're looking at the euro dollar. Right now, obviously with that gap up, it's difficult to really say what's going to happen. If I switch to the 30-minute chart, you can see that with a slight retracement, it would probably fill that gap. I don't immediately trade gaps as soon as I see them, especially when the market opens, because they don't always get filled. In most cases they will, but you can go back to the dollar yen, and you can look at gaps that were created all through the late summer, and they just continue to go higher and higher and higher. In many cases they didn't even get filled. So you got to be really careful. If there's a gap that's created as a result of some temporary, maybe some rumors or some kind of statement that isn't confirmed, then I'll watch it and then see if maybe I can then trade and fill that gap off of a candle pattern. But for the most part, if it's just something that happened as a spike or non-farm payroll, then I want to be really careful with it because the trend could continue in some cases. So right now I don't have a signal. I would not immediately sell this even if it does work. That's not my strategy because again, they don't always work. I just want to be correct as often as possible. And here you can see just how choppy non-farm payroll was on Friday. But anyway, the only way for me to really determine what's likely to happen next is to go to the larger time frames. So let's take a look at the larger time frames. Now we're looking at the daily chart. So in the last video that I made, we keep going back to this chart and we keep looking at it to identify the overall trend that's in place. And that's what's really important. Even though we see, if you look back, again, this is a daily chart. And I know I have the charts really compressed because it's not so much important that you see the candle patterns, but that you see the total development of this trend and where it's likely to reach or peak out at some major resistance or support levels. So if I pull the chart over here, you can see that resistance is all the way back up here. It's got quite a bit of room above 4,800. So let's take a look at what's going on right here. You'll notice that with this A low, B high, C 382 retracement, again, I know I keep coming back to this chart, but it's really important to be aware of what's really happening on the bigger picture of the entire trend. And all we see is multiple tests of that 382 retracement range, that C range, and it held and it continues. And this is, aside from a lot of the consolidation that moves on in here, pretty much an uptrend. I mean, the major support levels continue to hold and the major highs that are printed are being taken out. So we're looking at higher highs and higher lows, which is a classic definition of that uptrend. At this point, obviously it could reach some resistance and then pull back significantly, because if you look back over here to the chart, and now I'll open it up a little bit, back up over here, you'll look at this high that occurred. This was approximately October 25th of this year. And then it dropped quite a bit. I mean, this went from 1.3800 or above 1.3800 all the way down here to 133, below 133. So 1.3300. So you can see that that's a big drop, yet the trend still remains intact for the most part. And when price takes out that high from October 25th, then I would expect that the trend is going to continue on its direction towards those extension targets. We'll take a look at those extension targets in just a moment. At this point right now where price is, it's possible that it could be reaching resistance, because this is an old price swing high on the daily chart that occurred back here on February 1st, 2013. We need to be aware of this level right where price is now, 1.3711. If we go back to this 30-minute chart and we see that it's at that range and we see this gap, I really can't say that I would sell it based on all that information that price is at the daily chart. Daily resistance here, and then this gap. So I want to keep an eye on it, is what I'm getting at. I'm going to wait a few more hours until I actually consider trading something. It may take until the London session if I get some kind of trade that develops. But it's really important to be aware of this major resistance. It's major resistance here on the daily chart where the euro dollar is now. Let's take a look at the 4-hour chart. Well, I'm sorry, before I go here, let's compress this. So my extension target, based on this retracement that occurred back here June and July of 2012, looking at that A, B, C retracement. Again, I keep going back to this chart and these targets, these price targets, but the first one here is 1.4294 or 1.4300 area. That is very possible. Here on the 4-hour chart, we've got a new A low, a B high, and a C 618 retracement. And based on the depth of this retracement, this Fibonacci retracement, the Fibonacci extension target for this one, the first one here, is at 1.3820. So it, again, I mentioned that on the daily chart, it's at major resistance, but it's possible that if it continues and we get a signal to go long, that this would be the final target. This would be ultimately the final target for this Fibonacci retracement, is this Fibonacci extension target back up here at 1.3820. I don't have a signal just yet to continue this trade because I do, with that major larger time frame resistance, I do expect that price could pull back, but I don't have a solid signal to start selling it just yet, and I don't know how far it's going to pull back. So again, I need to wait a little bit longer. Here's the 1 hour time frame. Again, there's that gap showing right here. That's that spike low from non-farm payroll, and then the whole thing just reversed. Let's take a look at the so again, no trades signals just yet, but this is what I'm looking at. I see the possibility of some major resistance, but at the same time, I think the trend might turn around and continue on up. I just need more confirmation. So let's take a look at the pound dollar. Pound dollar, this is the daily chart. Again, we're looking at major resistance over here. Price just seems to be sort of floating right around that major resistance. This resistance point is a high of 1.6338, and that developed on January 2nd, 2013. So that was at the beginning of this year. So let's take a look at the 1 hour chart. The 1 hour chart, and we talked about this in just about all of the last few, maybe 6-7 update videos that we did all through last week. This is my range of consolidation here on the dollar, the pound dollar 1 hour time frame, and it has not broken below support, and it has not taken out this resistance point. It's a pretty big range of consolidation. The high is back up here. It is a pretty big range of consolidation, but it is the most reliable range for me to actually gauge a breakout trade. As far as trading a bounce off of this level, I'm not really sure what I would do here just yet. I would either go back to the 30-minute chart and identify Friday's low, and if price reaches or tests that low and then bounces, I may consider an HL30, or looking at the 1 hour chart, it might close and finally print below that support level and then start to drop. Again, thinking about the fact that we still see price right now at major resistance on the daily chart. Let's take a look at the dollar yen. The dollar yen, this is the daily chart for the dollar yen, and we are pretty close to this resistance point. It looks like it's probably going to test and maybe even spike through this resistance level. This high right here on the daily chart is, let's see if we can get that to show up there. That occurred on May 22nd, 2013 with a high of 103.73. So it's possible that it's probably going to hit it, maybe even go through it and then sort of stall. It's possible at that point because we are at major resistance. Here's the 4 hour chart, and last week we were looking at the same thing here on the 4 hour chart with that head fake down here to the downside. Remember, this was a candle that closed below that support level, and we were analyzing this before non-farm payroll to try to determine some sense of direction here, and I mentioned that even though it's printed a continuation breakout trade to the downside, it did not give that 3-pip entry here. So I would have never gone short this pair, and I mentioned that there was a possibility that price could turn around and come back up inside of this consolidation range, thereby printing or creating that head fake situation. And again, using that 3-pip entry, it keeps you out of trouble all of the time. It does for me every time I use it correctly. And I have multiple attempts or multiple examples where there was continuation breakout trades over the past couple of weeks, and they turned out to be head fakes. But it was the 3-pip entry that first signaled the possibility of the head fake, which is exactly what we traded on the euro-yen last week. It turned out to be a continuation breakout trade to the downside, but there was a lot of divergence. There also was not the 3-pip entry, and the whole thing reversed, and it was a different type of trade pattern altogether, which is something that I call the T2 pattern, and we were able to trade that back up for approximately 40 pips. Right now, it just looks like it's probably going to take out that high. I'm not really interested in jumping in right now at this point and trading it right to that level. That level, again, is only 36 and price is at 18 right now. It would be a really small trade. I'd rather wait and watch to see how price reacts. We're looking at the 1 hour chart now for the dollar yen. I'd rather wait until price reaches that resistance and then wait to see how price reacts. Maybe it would give me an opportunity to sell it if it's going to do something like that. I'm not really too sure. Or it will close and print a candle above that resistance point, and then we can either use or trade this one dollar yen, or use the dollar yen as confirmation for any of the yen crosses. In the next video, we're going to look at the yen crosses.